The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll take a look here at the FTSE, the DAX first, and then we're going to take a look at the FTSE. They basically look exactly the same. They've been in a downtrend, a short downtrend, since November the 1st. And remember, folks, that this is statistically the most bullish week in the stock market on a historical basis. The day after Thanksgiving, I believe, has a better than 70% chance of closing higher. But if it closes lower on the day after Thanksgiving, that has a negative bias, which means there will probably be some more to the downside. So we'll have to wait and see. We had a very interesting situation last night in the stock index futures. We actually made a higher high than Friday in the DAX. Oh, Larry, let's try it again. In the NASDAQ, we made a higher high than Friday, and we also did it in the Dow Jones Industrial Average by about 5 points. And then, of course, it sold off from that level. But anyway, we'll take a look here at the FTSE, and you'll be able to see that it looks almost identical to the DAX chart. That's probably related to what's going on in Britain with the Theresa May is going to be fighting for her political life. Boy, anyway, let's, that's not going to be of concern to us. Maybe it will be financially, but I'm not sure on how it's going to end up. I want to switch over to just talk just a little bit about something that I've always felt strongly about, and that this situation that we're in is all related to credit. It has nothing to do with the stock market, even though they are interrelated. But if we take a look here at, global demand for loans, and this is from Capital Economics, you'll notice that it has been trending to the downside, especially after the 2008 debacle. We had that loosening, all that quantitative easing stuff that came in, but you can see that overall loan demand has been going to the downside. Now, loan demand is important because if people are not borrowing, the banks are not making as much money as they should. So that leads us to the next thing that we ought to pay a little bit of attention to, and that is the banking situation, on the global basis. Now, remember, folks, the top 5 banks in the world are all in China. I know it's hard to believe, but that's a statistical fact that's reported, so we'll have to look. Now, if we look at the Deutsche Bank, which we've watched many times, you can see that we do have, from a 2018 level, we have an ABCD pattern coming in at the 1.27 expansion down around 860. We're trading at around 981 this morning, so that's going to be an interesting one. But always remember, folks, back in January of 2017, that Deutsche Bank offered their stock for 35% discount. What a wonderful opportunity it was at $21 a share. Just remember, if it looks too good to be true, chances are it probably is. The other thing to look at on this chart that's important is you'll notice this big red typing that I have there, special from the U.S. Federal Reserve, June 29th. Deutsche Bank is put on the dangered list. You can see where that little arrow is. It immediately rallied 30% over the next 3 weeks. It was still bearish, but it rallied from 10 to 13. That's just, showing that news was out and somebody already had played that game, and now it's moving down. The charts follows the trend, folks. So if there's more buying, prices are going up. If there's more selling, prices are going down. Now, we're going to take a look at a few other banks. I just want to show you how bearish they actually look. This is Barclays. These are European banks, but you'll notice that Barclays is heading down. I don't put the patterns in on these because I don't trade them. I just want to show you the overall trend, is going down. Some of them look a whole lot worse than others. The other one we want to look at is Lloyd's Bank. I'm just going to do about 3 of these just to give you an idea. They all look the same. And here's Lloyd's Bank. Everyone's familiar with Lloyd's of London. You can see this stock has been, going down since January of 2017. And when the rest of the market is going up, that's not a very good sign. Now, that Lloyd's was hurt by those hurricanes, so that has some implication there. And then, of course, we have one of the big ones, especially for foreign currency folks, is the RBS, the Royal Bank of Scotland. And as you can see, this is a very strongly trending market to the downside. All of those are looking, very, very interesting. Now, if we go to our country here and we take a look at one of the big ones, and this next one, of course, we're going to look at is the largest in the banking section, which is Goldman Sachs. You can see the critical level that we're setting at here at 198. Now, we hit there 3 times last week and actually closed above it, so that's a pretty good sign. But anything below 198 in Goldman Sachs sets up much, much lower prices. You can see even the first support down there doesn't come into 188. So watch Goldman Sachs at that 198 level, because we break below that. That is not a very good sign. Technically, it's a spot where there should be good support, and if it doesn't come in, you're going to be looking at something that is going to be quite nasty. So that's just my 2 cents worth, but keep an eye on it, what's going on. I'm going to cover natural gas, Ruby. Absolutely. I'm going to do that right after let's just do this one little thing here with the that I do follow. Here's the banking index that we have here for the United States, folks. This is the big one, it's Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, all that stuff. You'll notice that we came down and made a almost perfect 61% retracement last Wednesday. We had a pretty good rally. As long as we stay above 96, it looks okay, but below 94.30, lights out. That's just 94.30. We're trading at 100 now. That would take a lot to get it down there, but if we get down there, that's a really, really negative sign. So we'll watch that. Yes, natural gas we have to talk about, because that was one that I was watching very closely on Friday, and I wanted to go through it. Remember, we were looking for the 382 retracement to come in around 429. We got to 429 and we rallied up to 434.90 within about $1 of where the stop was. Then it dropped $900 down to the 412 level, and then it went back up again. You would have had some profit in there at some time, but the worst would have been a break-even trade, and you would have been stopped out long before the close. And look what happened overnight, folks. The market gapped up to the 78% level. That ABCD structure that you see there, the CD leg is 1.618, the value of the AB leg. And the reason for that is when you see that gap, you have to calculate that factor in. And it could either be 1.27 or 1.618, but because it went to the 78% level up there at 471, then I said, well, that's probably where it's going to go. Then it backed off, and then you'll notice that about, it must have been about 4 or 5 hours ago, it hit the exact 78% level at that lower top. It went up there and touched it again. That was the best time, to look to be a seller there, because your stop there is just above the high. And then you had the 3 lower tops. You can see the 3 lower tops that we've had since all morning long here. And now we're getting down into filling this gap area. So that's what I'm looking at in the natural gas. It's a very, very wild little puppy, but it is flat out tradable, and it does fill you where you're supposed to be filled most of the time. You don't get a lot of slippage there. So we're going to take a break here. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the E-mini S&P here, including the Sunday night trading. If you'll notice that on Sunday night we got up to 2748.75, I believe. The high that we made back on the 14th was at 2749, so it missed it by one tick. We did take it out in the NASDAQ by about 4 or 5 points, which is nothing in the NASDAQ. And we also took it out by about 5 points in the Dow Jones Industrial Average. Well, that to me was not a very strong sign when you should have something that actually opened lower and then went up and touched those highs. So that was what I thought was a relatively, low place to put a short on. But look where we are now, folks. What I suggested is that we would probably get down into this 2718 level one more time. And last I checked, we were at 2729 or something like that. So we're only about 10, 11 points away from it. That should be good support today. In the S&P, anything below that would suggest that maybe there's something a little more troubling. Now you'll notice here on the 15th, we made that 3 drive to a bottom pattern. We were down there at 2673. That was basically a pretty nice ABCD pattern that came in exactly on target. And then of course, the NASDAQ was doing exactly the same thing as was the Dow Jones Industrial Average. And then of course we had the really strong rally into this area. Someone keeps asking me about yes, that ES pattern is very close to that expanding triangle diamond pattern. You're absolutely right, Dudette, Maria. And happy Thanksgiving to you, even though your country doesn't Well, you're a countryman now anyway. Anyway, they don't celebrate Thanksgiving Day across the world, folks. So the rest of the markets are probably going to be trading electronically on Thanksgiving Day. But it's a good time to stay away from the markets and enjoy your family. And folks, try this holiday. I always say this, but try this holiday to take care of some people that have very little, the homeless, and then also any veterans that you see that need help. My favorite is the Gospel Mission here in Tucson, Arizona, which used to be run by Spike Lee's brother, and then when he passed away, somebody else took it over. But they're really good, and 95% of everything that goes into that place is given. It goes to the people. And boy, if you don't think that people really need it, go down there sometime, and or if you have one of those in your hometown, and take a look at the great work that they do. I used to give them money for Thanksgiving to buy turkeys, and instead of buying turkeys, they would buy peanut butter and bread. They needed to feed more people than one big turkey or two big turkeys would do that. So now what we do is we just give them some cash and let them decide what they need to do. And they need clothes, and one of the things they need the most, folks, is if you got socks. Socks is something that they always really need. So anyway, let's get off this soapbox and move on here to the next one. We had a question here about one of the things that we've been following, and that is this British pound. We're still in the midst of Brexit. We don't really know what's going to happen next. But as you can see, we have a double ABCD pattern down here at the 124.70 level. I really believe we're going to get to that level. You'll notice that we made the 135 pattern back in September, October. That was a really, really nice pattern because you have the lower tops. You're trading in the direction of the trend. You're selling into a rally that is equal to the previous rally, which was 78% level. And now you have a double confirmation down here at the 124.70 level. So we'll have to keep that in mind as we keep watching these. Now, if you'll remember last week, we talked very, very significantly, well, a long period of time, I don't know if it was significant or not, about the U.S. dollar index and where we were. And I want to bring up that dollar index because we're lower today, and we're getting up into some interesting spots here in the euro. But you'll notice here, we've been in an up channel ever since September. We broke out to the upside, which broke out of the weekly pattern, if you'll remember, and then we quickly reversed. There's a possibility that that could have been a fake out. Anything below 95.40 in that dollar index, to me, would be a really strong signal that that was a fake out in the dollar index, and the fact that you're probably getting ready, to see a pretty good run in the euro. Because if that happens, we'll be looking at something that would tell us that we're, most probably getting ready to see something, very, very dramatic to happening in the euro. And since we're talking about the euro, one of the things that we were suggesting was the fact that if we had this move up here to around the 114.40 level, that would be a very interesting spot. And so far this morning, that has been the high. So as long as we don't get above that 114.60 level in the euro, it appears that this is nothing more than a corrective move coming off of that big ABCD pattern down at the 112 level. But again, we have to watch it very, very closely. Now, I spoke with Rich Anderson over the weekend. We've got to change gears here for just a little bit. And there was a big move in the December hogs on Friday. They went limit up the 3 points, and it looks like we're going to be higher this morning. And you'll notice that we have going to take out that double top and head higher. This is all related to the Asian hog problem that they're having in China. Evidently, it's affected more than they originally thought, but that's news out of China, and trade the charts, don't trade the news. But that chart looks relatively bullish. That's a very, very interesting situation. The important thing is that when we have Rich Anderson on this phone and he tells you that these hogs are down near the cost of production when they were down there at around 46, you ought to pay attention to that, especially when you have a nice three drive to a bottom pattern that gives you a really good spot to to take a look at something from the long side. That's the way it looks like from this chart. The cattle were very good to us these past few months because they've been up and down, making beautiful retracements as we've gone through, and they're still holding up relatively well. We'll take a look here at the December cattle, because you notice here that we had a really nice Gartley forming here in the December cattle down there at that 114 level, and now we're trading about 1.5 points higher already. So if you happen to do that trade, the risk on that would be about break even now. You would not want them to get below 114 any longer. Yes, I've heard the news about the Nissan Motors high-flying chairman Carlos Ghosn was got fired for stealing money. I mean, can you believe this? I mean, I got arrested. I can't believe anybody could do that. It's just well, nothing should surprise us anymore. But that's just truly amazing. Here, a CEO of a major, and not only that, but look what's happened to the stocks of Nissan and what was the other one? I can't remember the other company that he had, but those stocks have gotten hit really bad. And you're talking about what hundreds of thousands of dollars a year. And yeah, thank you very much, Maria. Maria just posted the guy makes $7 million a year plus stock options. Are you kidding me? Give me a break. Shut the front door and raise the rent. We'll be right back. Oh my goodness.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a quick look at Bitcoin here because it's getting ready to head down to that area that we really like so much. We're trading at 51.48 this morning. Remember, there's multiple targets in Bitcoin at $4,000 to $3,800 per share. Remember, the high that we made back in December was just a tad under 20,000. We're using Bitstamp here as the example. The actual Bitcoin itself actually hit 20,000, but the futures have really failed as far as a trading vehicle, I think mainly because the price is a little weird. But I think we only have an open interest of about 3,000, which is really nothing considering it's been almost 10 months with nothing, coming to happen. So the only reason I'm bringing this up is the fact that I'm trying to show you that the technical analysis works on anything that's actively traded, and it certainly is actively traded, not on listed exchanges, but it is very actively traded on the internet. Look what happened during September and October. There was total loss in interest, and all it takes is just a little tiny bit of a move below 6,000, and you can see how quickly the market gave it up. And with those multiple ABCDs coming in at that level, it's going to be very, very interesting to see what's happening. We've been asked to take a look at one of everybody's favorite stocks, and that's Apple. We'll get this up here because it's a beautiful technical picture in Apple. And as you see here, Apple made the Gartley pattern up there at the 225 level. That was a perfect ABCD pattern, and from that level you see we broke down. And then what's really interesting, and if you look at it closely, we had a beautiful ABCD pattern from November. Well, actually, the C pattern comes in on the C pattern comes in on November the 7th. The B pattern ends on November the 5th, and that was a little 3-day rally. And then the A pattern is up there at that 222 level. And if you measure that ABCD pattern and draw it in, you'll see that the exact low that we made in Apple came in at the 186 to the tick. And what was the low? 186. And what did we do? We rallied from 186 all the way up to 190, 195. Now the last rally that we had there, we went from 198, we rallied up to 211, so we rallied $20 in that rally. This rally has only been $10. The key here is if we get below that 186 level in Apple, it's going to be in big trouble, folks. I mean, look at the downtrend. Something has happened since October the 2nd when it topped. Some type of I don't know what it was. It had to be something fundamental that we're not going to know about probably for maybe 2 or 3 more years, but that's what it looks like in Apple. This is not a bullish chart, and we as long as we stay above the 186, it's okay. We're trading at 189, I believe, somewhere today. At least that's what I thought earlier this morning, but anything below 186 is not a very good sign. And remember, we're into this really usually bullish, opulent week here, the week of Thanksgiving, but also on the other side of this, if the market doesn't close strongly this week, especially the day after Thanksgiving, that has very negative, connotation. So that's neither here nor there. Oh, we've got a caller here from Detroit, Michigan. John, are you there? Hello, John, are you there?
Yeah, can you hear me?
Yes, sir. Spot on. Perfect. What can I do for you, my friend?
Hey, happy Thanksgiving. Always love your show, Larry.
Thank you so much. I appreciate that.
2 things. Bitcoin. Martin Armstrong on his Armstrong Economics page said
Very
that
smart
the
man.
IMF has issued a statement stating that all nations should make their own cryptocurrencies. And he's saying that's basically going to wipe out Bitcoin and Litecoin, Ethereum, those, all of those outfits. So I'd be real careful. I know you've been looking for that 3,800 number or thereabouts, but we might be, in a cliff dive on this one.
Yeah.
So,
John, you're absolutely correct. And I think they have the last count. I think there were like 1,200 different cryptocurrencies that they have on the internet. So there's just the beginning. But you're correct. It is. It's a land of the lost over there. But I actually work with John Jameson every day. I speak with him for at least an hour every day, not talking about Bitcoin, but just other things that we talk about with the markets and political events and stuff, because he's a really smart guy. But he has been following this stuff from the very beginning, and he really believes it's not about cryptocurrencies. It's about this blockchain stuff that's out there that's so far over my pay grade that I can't even discuss it. But anyway, I watch the chart because people ask me to take a look at it. But you're absolutely correct. When the IMF comes out like that and makes some type of a comment, you gotta respect that. So I have not traded a Bitcoin at all. Period. That's it. I had a gentleman that worked for me. Yeah, so I just watch it, just like everything else. But John says that the Bitcoin or the blockchain technology is the internet squared. That the internet is getting overloaded with all the videos and all this other stuff. And with the blockchain, if that brings it into effect, it'll just expand everything to a level, like we've never seen before. But that's again, theory. So I really don't know.
Sure. Hey, could I ask you one other thing?
Absolutely.
If you get a chance, could you take a look at NVIDIA, symbol NVDA? And,
sure, absolutely.
Let me know what you think on that one. I took a flyer. It took a big drop on 18% on Friday. So I bought a little, and I'd just like to get an idea of.
Sure, stay with me right here. It'll be up here in just a second. Boy, it did. It's down again today, I see. A little bit here. Let's see where we're at. Oh, we're right at a 1.618 expansion. You got to be really careful here. That came in at 157. Well, you're not in too bad a shape. Hold on. Let me get this up here to take a quick look at it. You'll be able to see where we are here. We're right at a 1.618 expansion from the low we made back on April. So it should hold that level. And hold on one second. Let me do it again. I want to do the 1.618. This should be right at. Yeah. Well, here's what you got to do, my friend. You can't let this puppy get below. Wow. What'd you buy it about 149? 159?
I think it was 144.
154.
Or 54. Sorry, right.
Okay. Well, that can't be right because whatever it is, don't let it get below 144. That's the absolute. There's an ABCD pattern setting here this morning, I believe. Just double check it just to make sure we're right there. Yeah, we're right at here. Oh, this is it. This is it. Here's your line in the sand right now. If you take a look at this. If you get a chance to go into Tiger TV and look, there is a 1.618 expansion at the 1.6 level at 150. We're trading at 157.85 right now, so that's on a stock this big. A $10 stock is certainly warranted. That's a little, about 4%. So make sure that you don't do that and be careful. So that's the main thing. Below 149, you do not want this stock. Because you remember what happened to Facebook, remember what happened to Apple.
Right.
You got to be careful. So your line in the sand is at 150, I would say. 149, say goodbye and go,
that's where
look at something else. Yeah, that's what I would do. But, we'll see. But there must be some news out that's making it getting beaten up this badly.
Bitcoin. The Bitcoin stuff is killing it.
Is that related to NVIDIA too? That I don't know. Sorry. Hey, thanks for calling in, and a happy holidays to you, my friend. You betcha.
Okay.
877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I wanted to follow up with this natural gas here because this is a really active market and it's fun to watch it technically. We've already talked about the high, how it was made. You can see the three lower highs that were made since the 78% level was hit up there at the 470 level. We're now trading down at 448. What's important here, folks, if you'll notice, the low that I have forecast there at 444, that's the 382 retracement of the whole range. In other words, that would get you back into that gap area where it gapped up. If we get below that 444 level, we could see actually a big reversal in the natural gas today if, in fact, we do get that. But whether that happens or not, we'll have to wait and see. But it's really important, from a technical standpoint, to be watching that level if you happen to be trading, natural gas. But that's neither here nor there. Now, David White here at TFNN has asked a question about the 3-day rule that I use. The 3-day rule actually was told to me by my mentor, John Hill. And when I went to Chicago to trade on the floor of the exchange, one of the first people that I met was Barry. Oh my gosh. Hold on one second here, folks. Oh gosh, what was Barry's last name? Are you kidding me? Oh dear, this is, boy, talk about, oh dear, I'll get this anyway. Whenever I was doing my clearing through, oh dear. I'm going to have to quit this business. I can't remember Barry's name. He was just killed. Barry Lynn. Thank you very much, Marshall. Barry was killed in Palm Springs about 3 years ago helping fix a tire of someone. He was hit by someone from another country, and he was under the influence. But anyway, he asked me, he said, what can I do to make your stay here in Chicago more fun? And I said, if I have a loss in a position at the end of the third day, just take me out of it. And that happened over a period of a couple of years. It happened about a half a dozen times. Each time it was the right thing to do. Each time I actually let them take me out of the position so I didn't have to think about it. And it was Lynn Waldock. Yes, I actually had Jack Waldock's seat. That's who, he was a hog farmer from Ohio, and that's who I used. Anyway, that's neither here nor there, but that 3-day rule is good. And the reason why it's good is, folks, if you're not right after 3 days using pattern recognition, there's something wrong. And that probably works if you're doing an hourly chart after 3 periods, you're probably wrong. So these patterns either work right away or they don't. That's neither here nor there. So That's the key to it, is all about risk control. These patterns fail all the time. And when they do, you've got to stand aside and, do that. So that's it. Anyway, just keep in mind that if you keep your stops in there, you're going to be, stops will protect you, because if you're not using a stop, you're basically telling the market that, Mr. Market, I know more than you do, and so I don't need to use a stop because I know where the market's going. Hello, we'll need a judge's ruling on that one. You lost. So anyway, pay attention to that. It's very important. Now, let me talk about the Pesavento frustration index, and you're going to get a good example of that today. Here's one of the trades that we had set up just absolutely perfectly for today. We sent videos, everything out on it. This was a Treasury notes and Treasury bonds. The Treasury bonds went up and made the exact ABCD pattern. And it didn't fill us. We had our order set 2 ticks below the high at 139.31, and we got to 139.30, and then it's reversed about a whole handle. So you have to stand aside in that and wait and see if it's going to happen. So we'll have to wait and see, what happens with the notes and bonds. But this is an ABCD structure in a bear market, and we also have the possibility, of course, if we take a look here closely here at the Treasury bonds on the long-term weekly pattern. And believe me, folks, if you'll remember back in June of 2016, when rates were near zero, we had a double 1.618 expansion up there. We had a 3-drive pattern and a butterfly. I mean, everything in the world was screaming, sell me. We came down the rest of the year, and then in early June of last year, we rallied up to a 382 retracement, and we've been heading down since. We're very oversold, of course, and we could still get a little bit of a rally up into that area of possibly 143, but right now that 140 ABCD level was just absolutely spot on and kept it from going any higher at all. So whether that's going to be the case or not, a longer term, we will have to wait and see. Now, we've been asked to take a quick look here at the Hang Seng Index. We'll get this up here to take a look at it. You'll notice, hold on here one second, we have a beautiful island reversal down here that we pointed out way back in right after those October lows come in. And what did we do? We went up, and then we came down and tested the top of that range there, didn't break the island, and so it stopped right at the 78% level there on November the 12th. And now we have a potential for an ABCD structure, taking it up another 1,000 points to 26,007. Now that would fit in nicely if we have this up week that usually is positive, but we don't know this for a fact. We'll have to wait and see if that's going to be the case. We have another question here about one of our commodities, and that is the cocoa market. I don't trade cocoa very much, but boy, in fact, I never traded it at all. But if you look at cocoa here, it's a really nice pattern here. Last Thursday, we hit the exact 61% retracement at 21.50. We're trading above that now. As long as we stay above 21.50 in the cocoa, it looks pretty good. Now, cocoa's interesting because you'll notice those cycles that I have on the bottom. Those are from Jim Hurst, The Profit Magic of Stock Transaction Timing. The problem is they usually only work for 1 or 2, possibly 3 transitions. In other words, three possible runs, and then it starts to expand and contract. And that's mainly because, the overall structure that we're looking at in these cycles, I believe, is astrological, but I'm so far away from knowing any holy grail in that I just, try to use the new moons and the full moons and some other smart people like, Bill Meridian, Norm Winsky, Arch Crawford. We're going to try to have Arch on tomorrow, and I believe we have Norman, call it to the minute. Winsky is due on the 21st with some interesting timing things, so we'll keep a close eye on that. By the way, those of you that did contact Paula Webb, Mark Douglas's wife, and got some of the information from her, was really appreciated, so that's really great. Okay, take a look at coffee. We will be happy to take a look at the coffee, and it's to drink, not to trade. That's my opinion only. We'll take a look at it here. We got a beautiful pattern coming in there. Yes, you're right, Bob. We could easily get there one more time, and I think it would be a really good buy at that level. And your stop would have to be above that 104 level. But remember, after that 3 drive to a bottom that happened back in September, this thing ran 22 handles. That's a lot of bread, folks. Thanksgiving or not, that's still a bit. Look where it stopped. Exactly at a 1.618 expansion, a 61% downtrend, and a 382 downtrend, right to the penny at 125. So keep an eye on coffee. It's got legs. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to be taking a look here at the E-mini here, S&P. We posted this last night. The fact that we should have some good support coming in here at the 2720 level. We're only about 4 points away. We're coming down quickly, so that means that we're most probably going to go through that level. We've already had a 7-point range in this 30-minute bar, so that's indicative of something going lower. The 61% retracement of this whole move comes in at 2702. So below 2702, that's going to be big problems. So remember that 61% retracement level is at 2702. Below that, you're looking at something a little more sinister. And remember, our longer-term pattern completion on this is much, much lower. And this is a key week because it's usually a bullish week, but remains to be seen. Right now, the key point for early in the day is that 78% retracement coming in at 2720. That's on from the low that we made on Friday to the high that we made overnight, which was not quite as high as the high on the 14th, where we did get above that in the NASDAQ and the Dow Jones. So that has all the earmarks of a false breakout. So keep an eye on 2720 in that S&P, and below that is 2702. So that's really what we're looking at here early this morning here in the E-mini S&P. Also, keep a close eye if you are following that natural gas, that if the natural gas gets below that level of 444, that would be very, very nasty. So far, we've been down since we've been on the show. We've got to that 444 level, so be really careful if we get below it, because that would be very indicative of a market that's getting ready to break, because that's the 382 retracement. It hit that thing spot on, so, and that's where we're trading it around 446.50 right now, so pay attention. So live every day in an attitude of gratitude, and may God bless, and I'll see you all tomorrow.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!